What's going on right now, and what do you think that's going to do for the city of LA?
2025 is setting up to be a nasty year for real estate in this town in particular. Things have changed. And I think we're going to see almost a complete reversal. I think 20% increase is on the table, basically.
The city's fire chief said the conditions are unprecedented, unpredictable, and that there was no possibility of bringing them under control.
Everything that has occurred with the displacement and the lack of the destruction of housing, that it's going to change completely from a pricing perspective.
I think both, actually. I think that going into the fires, there was like a really weird dynamic in LA I hadn't seen in my 20 years of doing this. Rather than having a disaster 2025, LA is going to feel like it's like a bull market because of this wild shift in supply and demand dynamics.
As these wildfires rip through Los Angeles County, new fears of more homeowners insurance price hikes that could be spread across the state.
The end is actually a really sad story for LA for the exact reason you mentioned. All Angelinos are going to face incredible increases in their insurance. Here's what I think America will eventually be forced to do. It's basically the only option.
Welcome to No Vacancy, where I share conversations with LA's top multifamily owners, investors, and visionaries. I'm your host, Taylor Avakian, the founder of the Group CRE, and I specialize in the sale of apartment buildings in Los Angeles. On this show, we cut straight to what matters, market insights and real-world strategies straight from LA's multifamily icons to help you navigate one of the most complex real estate markets in the world, Southern California. Enjoy. Welcome to the podcast. My name is Taylor Avakian, No Vacancy, and today we have a special guest, and it's not only special because he has his own podcast and newsletter and an incredible real estate operator and owner, but because this is our third time trying to film this episode. The first time Nick came in here and he had just come over a little cold and was dealing with some voice issues, and like we couldn't, it was bad. We couldn't talk. Then the second time we tried to film this, I came down with a sickness and we had to cancel the day before. And so now finally we're both here and we're healthy and we're good and we're excited about to talk about some things. And there's a lot of pertinent things, a lot of timely things that I think I saw Nick's newsletter that he posted today about what's going on with the LA fires, and you have some thoughts on that. And so I want to, before we get into like the background and all the fun stuff in real estate, like what's going on right now, and what do you think that's going to do for the city of LA?
Yeah, we definitely need to talk about it. First of all, thanks for having me on the show.
Of course.
Hopefully we get through this time. I've done a lot of these kinds of shows, and I've never had it where I lost my voice basically in the middle. So that was interesting. But here we are a month later. It's actually, I think the timing is actually slightly better.
Yeah.
Because a month ago, my base case, what I was prepared to tell you a month ago was that 2025 was setting up to be a nasty year for real estate in this town in particular. My forecast was for, long listings, massive rental concessions, maybe a 20% price decline in residential and multi. And my theory was based on, weakness I saw in the economy and the fact that, the Fed hasn't quite won the battle on inflation. And now, man, it's things have changed. And I think we're going to see almost a, complete reversal. I think 20% increase is on the table, basically.
Wow.
So it's a huge swing for people who are fortunate enough to not have been impacted by the fire, obviously.
Of course, but on a broader scale. So why do you think that, first of all, what were the signals that made you think that the prices and values and things were going to come down?
Yeah, we had experienced a very challenging 2024. What's funny about real estate stats is that if you sort of studied like the headline numbers about, rental inflation in LA, it painted a picture that it was a good year. Like, oh, we had a modest increase, 3% increase or something like that. But on the ground, that wasn't true at all. And people were giving away massive concessions, 2 to 4 months in some cases, and even having tenants with leases turning over negotiate for discounts. So we were seeing outright deflation in rental prices in LA in the range of 20% in my view, just based on the data that I have.
And these are multi-homes or what?
It was everything that I have sort of exposure to, which is homes and apartments of any size. You know,
Mhm.
a lot of my friends who have sort of institutional sized products were reporting the same thing.
Wow.
Which begs another question, which this isn't a subject for this podcast, but
Yeah.
the fact that that data didn't make it into the sort of official information is beyond me. But
Yeah.
last year was a disaster, and there was nothing on the horizon to suggest that that's going to get any better in 2025, because Hollywood is still sort of struggling. As I mentioned earlier, the battle against inflation is far from over, and we have, you know, a lot of political turmoil going into the end of last year. That, you know, half of the Trump platform is inflationary, and the other half is maybe even potential to cause a recession, right? If you fire a bunch of government employees. So it's just a weird picture. So that was why my base case was so low.
And then now with what's happening, there's, I don't know the exact number, but somewhere between 5 to 7,000, I believe, homes, and then 15 or so thousand structures and buildings and things like that. Like 756 units, I think, in the Palisades burned down for apartment units. So that's a lot of displacement. So you feel like with everything that has occurred with the displacement and the lack of the destruction of housing, that it's going to change completely from a pricing perspective. Do you feel that way because of the incomes of the level of the people whose houses were destroyed, or do you feel like that from an actual supply demand perspective?
Yeah.
Both.
I think both, actually. I think that going into the fires, there was like a really weird dynamic in LA, something that I hadn't seen in my 20 years of doing this, where there was a glut of single family houses, relatively high end, that were vacant for rent.
Mm-hmm.
And that's a function of, you know, maybe there was too much spec development going on, you know, in the go-go days of
Yeah.
zero interest rate, but also the fact that the housing market, the for sale housing market, was essentially broken, and it's still broken. You know,
What do you mean by that?
there's this, with mortgage rates where they are at
Uh-huh.
7%, nothing in America is affordable. And this town, nothing was affordable when interest rates were zero.
Uh-huh.
And so now that the mortgage you can get is in the sevens, it's like a non-starter.
Mm-hmm.
And so what that led to is that a bunch of people who may have wanted to sell their properties in 2024 couldn't sell them. And so they had them on the market for lease. And what's happened already in 10 days or so, like a lot of that supply is getting taken up by, you know, wealthier families impacted by the Palisades fire, for example. But we're seeing it at all price points. And actually, we're seeing signs that sort of make me optimistic about the response to the fires from the insurance companies. Because I thought, you know, 3 or 4 days ago, I was like, you know what, these insurance companies are going to be shady, and they're going to make it really hard for people to get leases. But we're helping a friend lease a house not too far from here in Sherman Oaks at a decent price point, but not like this crazy, you know, $30,000 a month type thing. It's maybe more like a $5,000 or $6,000 place. And the insurance companies is on it, communicative, is signing up for the auto pay on the rent, all in like a 24-hour period. So
Wow.
gives me hope that maybe, you know, as for the people who are fortunate enough to at least have insurance,
Yeah.
that they're not going to find it impossible to rent places.
Did you know anyone who didn't have insurance?
No, not personally.
Okay.
Yeah, but I've heard the numbers are like greater than 10% is the estimate.
I just saw a video of a real estate agent, like a TV real estate agent, say that 50% he
Wow.
thinks
That's
didn't have a
wild.
div insurance. And I'm like, oh my gosh.
Yeah.
The average price point in the Palisades was $4.5 million or something like that. And if you didn't have insurance, and not to say that, you know, they didn't have wealth in other places, but for a lot of people, their home is one of their biggest assets. And if you bought a property in 1980 and now it's worth $4 million, like maybe you bought it for 300, 400 grand, like
Yeah.
you may not be the guy who's bringing in a couple $1 million a year. You just happen to buy a property in a good location and the appreciation happened. So
That's right.
I'm very interested to see how it affects, because the mass market in terms of pricing. So, and what I mean by that is because when the challenge that we've had in underwriting and working with apartments is that the expenses have gone up crazy over the last 3 to 5 years, probably like starting 2022, expenses started to shoot up. Insurance went up like crazy. Utilities went up like crazy. A lot of these habitability claims were happening. Like, it was very difficult to keep up with the rising expenses for apartment owners. Now that insurance is, there's a huge loss from these insurance companies in terms of the damage, $50-60 billion, something like that, I guess is what people are saying. How is that going to affect the greater market in terms of the insurance? Because if you have to underwrite $1,000 a unit, or you were underwriting $1,000 a unit on your property, and now your new insurance is $2,000 per unit or $2,500 per unit, like,
Yeah.
that doesn't make the numbers work very well.
Yeah, it's a great point. It's actually something that I wrote about in my article today, where right now, like, rather than having a disaster 2025, LA is going to feel like it's like a bull market because of this wild shift in supply and demand dynamics. But the end is actually a really sad story for LA for the exact reason you mentioned. All Angelenos are going to face incredible increases in their insurance. And so once again, LA is going to become more expensive to live in. Like, the mega trend of our lifetime is essentially fully intact. And what's crazy about it is that a month ago, had we recorded this podcast a month ago, I was ready to talk about how, man, this is the first time in 40 years when LA has the potential to sort of be a normal market where supply and demand and macro forces cause the prices to actually decline. And I don't think we see that in 25, but it is a potential for future years because of this insurance. Unless the federal government comes up with some kind of program, or in combination with the state, Angelenos who own every type of property are going to have trouble with this. And it's going to have, I don't exactly know what the damage is going to be yet, but it's going to be substantial.
Jeez, man. That's crazy. Do you guys have any vacancies in your apartments, or you're pretty leased up with longer term tenants?
So we had some vacancies. They're all full now.
Okay.
They filled instantly.
1 bed, 2 beds, 3 beds?
We had a house.
Okay.
They were like a 4-bedroom, 1,000 square foot house. We had a couple buildings, a couple apartment units, like condo units we were managing for some friends, the house in Sherman Oaks I mentioned.
Yeah.
And then those all filled. And we're in this weird, unique position where we have some new construction buildings that are about to get C of O.
Oh.
And so Mayor Bass just passed this emergency directive, which I really appreciate and like, and I hope the city actually follows through on it. But we have 2 buildings that qualify as like, hey, we're going to help you get your C of O really fast instead of take forever. So we're going to see how that plays out.
Interesting. So they're like fast tracking some.
Yeah, they have a whole series like of measures that they supposedly are going to do to fast track the getting units online. And I'll look forward to reporting back. Because on that one, my base case was, based on prior experience from 2024, these projects are at a point in the process where we're looking at like 90 days because of just like really just ridiculous city processes.
Yeah.
So it was going to be a 90-day wait, and we'll see if the emergency directive changes that.
Wow. What is, just to give people some context, what is your exposure? And what exposure I mean by that is, like, what do you own in Los Angeles? And then what does the real estate holdings look like right now?
For Metros Capital?
Yeah.
Yeah, we own a portfolio of houses and small apartment buildings. Apartment buildings ranging from everything from 4plexes to 18 units here locally.
Okay.
And then we own some buildings back in Atlanta that we acquired in what feels like a very long time ago.
Yeah.
In the early 2010s.
Yeah.
That are much bigger. So these are like 300 unit plus type buildings.
Got it.
Yeah.
Okay. And then on the front of those C of O buildings that you're building, is that with Metros, or is that a different?
That's with Metros as well. Yeah.
So you guys got into the multifamily development space, I assume, 5 years ago, 4 years ago?
Yeah, something. Yeah, so that's sad but true.
Yeah, sad but true.
Yeah, most of my career is buying existing properties, but right around 2016, 2017, the combination of factors had created a circumstance all across the country, really, where it was really difficult to make the acquisition of existing assets to make any sense because, the Fed had suppressed interest rates for a long time. And so there was this global hunt for yield, and apartments got bid up to where they didn't make any sense.
Mhm.
You know, they haven't really made sense in LA in a long time, but this spread out through the whole country. We experienced it even in Atlanta. So like all entrepreneurial real estate people, we went out on the risk curve a little bit. We're like, okay, well, if we can't buy anything, maybe we'll try to build something from ground up.
Uh-huh.
And so we had a series of projects, not that many, only like 5 of them.
Okay.
But they have all taken way too long,
Yeah.
cost way too much money. And going into, this year, I thought we were going to struggle to lease them up. I thought they'd take forever to get their C of O. I thought we struggled to lease them up, but that might not be the case now.
Interesting.
Yeah.
Man. It's so strange to see the changes that occurred, these kind of black swan events, and how they shift or fast track, like with COVID too, right? Like that shifted a whole thing. It basically fast tracked a bunch of things from work to home to the office market crash to
Yeah.
a lot of these real estate things that were inevitable, felt like eventually, but it just streamlined it significantly. So I'm curious to know if in LA, and I talked to Ari Cahan last week or a few weeks ago about how he thinks and he hopes that this fast tracking, this process that the city government is trying to do right now to help a lot of these homeowners, is something that they can keep and maintain and allow this to be a use case of like, this is how it should be done, right? This is how we can actually get shit done when we need to, instead of doing it once in an emergency state and then, oh, we're going to go back to our old ways of taking 17 years to build any affordable units or any apartment units or anything like that.
Yeah.
So it's going to be super interesting to see from that perspective. Do you feel like right now that the growth in the economy and from a macroeconomic standpoint, I know Trump's coming in, do you think that's going to shift the markets, or what do you think an impact that's going to have on a macro level, as someone who owns in Atlanta and as someone who owns in Los Angeles?
Yeah, I want to answer that question because I'm fascinated by it. I've been thinking about it a lot. But before that, your friend Ari has a good point. Like this moment in time, to me, it's almost funny. It's not funny though because of what it has meant for Californians for 30 years. But basically, what all across the state at every level of government, you've seen people come out with emergency directives, essentially saying, well, you don't have to do X, Y, Z, all this stuff. And the truth is that could have been done at any moment. And that this is all sort of stuff that we've imposed upon ourselves. And the critics of local government and the development process in LA for the last 20 or 30 years have been hammering this, like, this is self-imposed. And yes, we do care about the environment. And yes, we care about creating safe places and having appropriate working conditions and all these things. These are important priorities that we can't just throw out. But there's a bunch of things that we can throw out, and we're throwing them out as we speak because there's a bigger priority, which is, hey, we need to get people in houses. And so I hope that this moment in time is a moment where Angelenos in particular can reflect upon the priorities that are out there and maybe go a different direction, because what we've been doing is so obviously not working. And everyone knows about it, but no one seems to want to like step up. Even the politicians who've attempted to sort of run against the consensus have been really like safe. When someone kind of needs to come in and say, listen, none of this stuff makes any sense. Let me explain to you why we're going to throw it all out and do something different. And part of me thinks that we might actually see that in response to the fires, because there's a lot of angry people. No one's going to forget this fire, and there's 12,000 people who are never going to forgive, right? All these people who suffered, loss in such an intimate way. When you lose everything you've ever owned in an instant, like that changes you, I'm sure.
And I want to come back to the question I asked previously, but to bring that up and to note of, it almost feels like, and I don't know his policies at all, right? And I know what he does, but Rick Caruso had a pretty moving speech, I'd say, because his house was, him and his daughters and his family's houses were burned. And it almost makes sense for me from an actual incentives perspective, where someone who doesn't need to climb the governmental ladders, this dude's a billionaire. Like, he doesn't need to run for government. He could live a happy life if he wanted to, but he wants to for change. and maybe there's ego stuff involved, whatever, right? Donald Trump, you could say the same thing. But like his incentives are not to get to a place where then he can make a bunch of money. Like he's already made a bunch of money and he has business acumen. So I'm curious to know if someone like that, whose incentives are aligned with actually making the city better, because it not only makes his products better, but it makes everything better for the community that he's grown up and built. Like, I wonder if it needs someone like that in there who doesn't need to appease the votes of everyone and try to make everything, make everyone happy to get to the next level. It's like he doesn't really need to get to the next level. He's not incentivized to that. So that's going to be interesting to see, because I've already been, I know where a lot of real estate people lean and their perceptions, but I don't think a lot of people are happy with the way that the current government previously was handling it. They're obviously trying to do a lot to improve that now, but it's going to be interesting to see what happens.
I agree. Like, I don't know if Caruso is the right candidate for the job or for the mission that is needed in this town. He may. There's a lot of things that he probably would do better than an establishment politician, for example. But the focus, in my view, is we need someone who's willing to place efficiency and effectiveness at the core of the platform, instead of, for lack of a better way of describing it, instead of like a virtue signaling or virtue signaling is not a right word because it's too negative. I wrote about this in the article this week as well, where Los Angeles is a really interesting place because the citizens have been super generous with respect to the progressive agenda. And so we've been consistently voting for very progressive, benevolent policies to support everything from the environment to homelessness to even criminal justice reform for a period of time. We've turned our backs on that, obviously, in recent times. And along the way, we've completely forgotten or lost focus of the truth, which is that in order to care for our fellow citizens, we actually need to be operating from a position of strength. And we don't have that. We don't have the financial resources. We don't have the systems and processes. We don't have the leadership and foresight in the halls of government. And so I feel like if there's a switch, whether it's Caruso or not, that's the platform that I feel like Angelenos in this moment in time would be interested in, which is like, hey, listen, let's put politics aside for a minute, and let's even put the discussion about the agenda to the side. Someone could say, I support all that, but let's do it when we have actual resources. Because if you don't have any resources, what are we talking about? We're just going to do a bunch of half-baked things. And so I'm curious to see how the politics evolve from this moment just based on that. I kind of feel like this could be a turning point.
The focus, there needs to be a focus, and people need to not try to do a million and one things. And it's true. I see it in my business too. It's like you try to do everything and you end up getting nothing done. So there needs to be this focus, this priority in terms of actually solving the main issues, the one big thing. And then we'll figure out the next big thing, and then we'll figure out the next big thing. But it's kind of the Elon Musk philosophy of like, find a constraint, fix the constraint, then move on to the next constraint. Right.
And refusing to put your head in the sand about things that aren't working. And so, this happened a lot in LA where, and Angelenos keep actually voting, even though things like homelessness is a good example. For example, LA, the population has been incredibly supportive of very compassionate policies, which I support. I think they're all well-intentioned policies. But the problem just keeps getting worse. And I think what is going to take on an issue like that is a politician like I'm describing come out and say, listen, these are people that need our help, but here's what it takes to help them. And not sugarcoat it, don't hide behind it. Like, someone needs to come out and say the real number. The real number is like 50 billion or something, and you need to build shelter spaces at this rate in this time frame. But everyone, even Caruso, when he ran, the reason he lost, in my opinion, is he ran on sort of like a half-baked plan of building 36,000 shelter beds or something like that, when he really just should have said, we're going all in on shelters like New York, and here's what it's going to cost, and here's why it's worth it. that message would have resonated better than the one he came out with,
Yeah.
in my view.
Yeah. No, I get that.
Yeah.
I totally get that. I think people are fed up too with this kind of fakeness. I think that's why Trump actually won. And I don't want to get too political, but like,
Yeah.
people want realness now. They're over this fake bullshit of just covering it up with this, speech written stuff, and they want the real person. And I think from a bunch of political figures being on podcasts and actually seeing to get to really know them and get to see them as a person and who they are, that feels like where we're headed as a society is let's see the real you. Like, what do you really care and stand for? We don't trust the facade that a lot of people are putting up. We want to see what the realness is. At least from my generation, it feels like that's the case. So we're headed for a very interesting, decade and a half, especially with technology, AI, all that kind of crazy stuff. The world is the last 100 years is gonna change in the next 10. It's gonna be really interesting.
It is, and it's everybody sort of knows that, and that's why people are feeling so uncomfortable. And throwing in like natural disasters that keep happening, or we're in wars, and it makes people really uncomfortable. Absolutely.
To get back to the macroeconomic question, right? Atlanta, you own some properties. Tennessee, I think you said you own some properties, in Los Angeles. What is your macroeconomic view on where we're headed and in the current landscape and in regards to real estate and the markets?
Yeah, it's really hard to say. And I think there's sort of two things that are worth considering when trying to answer this question. The first one is, what is the Fed going to do, and what can the Fed really do? And we're in this sort of unprecedented period where the Fed is sort of declaring victory on inflation, but we're still 50% above the target. So the latest inflation reading was like close to 3, and the Fed's official target's 2. So we're 50% above, and we cut rates, but the bond market basically erased the cut by moving completely in the other direction. And so the market doesn't believe that inflation is done. We have an incoming president who has a history of sort of being combative with the Fed and maybe even willing to challenge the independence of the Fed, who thinks that interest rates are too high. But the market is kind of saying the opposite, right? That we need, and I think the inflation question, it's hard to say where it's going. To me, it feels like all of the risk is to the upside, right? Like oil could go up, insurance is going up. Like there's just so many things that are the most likely price move from here is to go up. With one caveat, the Chinese economy is sort of the driver of growth. It has been for 20 years, especially in sort of the commodity sector. And they're really struggling, and they're having a lot of deflationary pressure. And China could export that deflationary pressure to the rest of the world, and it would be good. It would actually be a savior type moment for the West, because the West needs inflation to go back to 2. Otherwise, they have a sort of unsustainable fiscal balance sheets. So that's the one end. That's the Fed. So the Fed has got this inflation problem. It has an interest rate problem. And then you have the Trump agenda, which is confusing. It's on the one hand, it's sort of exciting in the sense that, are we really going to try to deregulate America and improve business conditions? And on the other hand, it's like, doesn't make any sense, because tariffs are instantly inflationary. And if he's going to do it to the extent that which he says he's going to do it, I don't think he will, because it honestly would be devastating to the American economy. And the Fed would absolutely have to raise rates, because it's instantly inflationary. And then you have this other weird thing where you have the excitement around Doge. The problem with Doge is that you can't really execute it without blowing up the deficit. And so here's the conundrum. So basically, to execute Doge, because of the way that the budget is structured.
Explain Doge real quick.
The Department of Governmental Efficiency. This is like the Vivek Ramaswamy and Elon Musk. We're gonna find $2 trillion of savings in the federal budget by looking at all the waste.
Yeah.
And let me be clear, there's absolutely waste. I'm in the camp that there's a lot of waste.
Yeah.
But the budget structure of the government is not that flexible. You got Medicare, you've got interest on the debt, you've got the defense budget, and then you have all this other stuff. And so is anyone going to cut Medicare and Social Security? Highly unlikely.
Yeah.
Are they going to cut the defense budget? Highly unlikely. So now we're talking about this sort of alphabet soup of all the agencies, the SEC, the FDA, and the Department of Labor. And these places are wildly inefficient. There's no question about it. But there's 3 million employees. And so like all the head count, like all the efficiency things that you see in corporate America, at the end of the day, what it is they fire people. And so, okay, what are we going to fire 1 million people from the federal payroll? Well, that causes a recession in this country. And if you look back at the last 3 or 4 recessions, in every single instance, the fiscal deficit expanded by over 500 basis points. And so it's contrary to the plan. Like because you're essentially going to lower tax receipts. You're going to cause a shock, a recessionary shock, which is going to cause tax receipts to come down, and then you're going to get an even bigger deficit. And so DOGE is kind of, it's a weird thing to be excited about because I don't see how you could do it and actually achieve the deficit reduction that they're trying to achieve.
What is a way that this problem can be solved? Because it seems like it's a death spiral which is like, you make money, but then your expenses are higher. And then the more you make money, you have to make more money on top of that to then pay for the expenses. Like what is your opinion on a possible solution?
So here's what I think America will eventually be forced to do. It's basically the only option is they're going to have to get into a recession and cut rates to the floor. And they're going to have to try to refinance the entire federal debt and at as low of interest rate as possible. And maybe even just have the Fed buy the debt. That's what they probably should have done during the COVID era when rates were at the floor, is they should have extended the term of a lot of the debt. And, because 30-year was, I don't remember how low the 30-year got, but it was really low.
Yeah.
And instead, they sort of kept doing what they were normally doing, which is they do a lot of short-term issuances. They do 10 years and even shorter. And now, the 1-year rate is 5% or something. And they could have locked in 30-year debt in the COVID era at like 3 or less. And so I think that's what they're going to be forced to do. Like, if you want to reduce the deficit, you have to reduce the interest on the debt. And the only way to do that is through some sort of innovative, quasi-illegal action, like let's do quantitative easing and monetize the debt.
Yeah.
And I think it's a complicated enough financial transactions that everyone around the world is essentially doing. So maybe we could get away with it.
Yeah.
But ultimately, it's not great for the long term because you're basically creating money and then using fake money to buy it.
Yeah.
It can't be good for the system in the whole.
You strike me as someone who's very well versed in this, like a lot of things, right? You have a very nuanced approach to it. I've read your newsletter, and there's a lot of nuances to you. There's some spiritual aspects to you. There's obviously some economic aspects to you, some political aspects, some investment, real estate aspects to you. So like, why is that? Tell me a little bit about how that came to be.
Yeah.
And what drives you to want to be curious and learn all these different aspects of it.
Yeah. That's a tough question, but I've actually been thinking about it lately because I was going back and just thinking about my career and even how I got into real estate. Like, I think the best way I can summarize it is that I've always been interested in freedom. That was what I was sort of really interested in when I got into real estate. I had 1 or 2 jobs in my life after, doing really well in school and stuff like that. And for me, something about the idea of like being chained to a desk or whatever, it just like really bothered me. I hated it actually. And I was originally attracted to real estate because it looked like a place where I could have like an enormous amount of personal freedom, which is what I was interested in. And it was only recently that I realized the truth, which is that of why I wanted, the freedom is that I am really curious. I'm intellectually interested in a lot of areas. And I even think back to my early days as a real estate investor. I was flipping houses in South LA, and I was living in West Hollywood. So I did a lot of driving. And what I did, during those years is like consumed an enormous amount of lecture series. For example, like I downloaded there's this company that's still around. It's called the Teaching Company or the Great Courses or something like that. And I listened to like hundreds of lecture series on anything that I was interested in because I was just driving around, going to job site, and I would get to the job sites and, do what I had to do, go talk to the construction people or whatever, or talk to the agents if I was trying to get a deal. But I was really just learning and like following like, I guess what I would call my true passion, which is to engage with like all sorts of different things. I'm interested in a lot, and I'm interested in, continuing to advance my knowledge of things and now in recent years to share it with other people, which is why I started writing and why I started doing the podcast, because I realized I actually had a lot to say.
Yeah.
I felt like saying it.
Yeah. You've had many years of soaking up so much different information, experiencing different parts of the economy, different businesses. And that level of experience, I think, is something that not a lot of people necessarily get to understand. And what the traditional path is: go to school, get a good job, work at your job, and work there for 35 years, 40 years, and retire, and then do your thing, raise your kids, whatever. It seems like over the last decade, and maybe decade and a half, there's been this shift towards more freedom, to more entrepreneurship, to more creating your own wealth, burning your own path. And it seems like you were on that path pretty early, from just what your path has been, your story. Do you feel like we're headed to a place where that continues to be the case and people try to be more independent and find their freedom?
I think so. I think we live in a very unique time in history where, because of all this technology and the incredible sophistication of our economy, like you can live a pretty amazing life doing kind of what you want to do, what you like. And that is unique because for most generations of humanity, there were little outlets, and in many cases you had little choice in those outlets. There's only so much you could do. You'd be born into situations and then you could never get out of them. And we live in this incredible time where you can, especially in a country like this, you can go and do what you want. And not only that, you can make a lot of money doing it. Like, you can basically do anything and make money these days. There's a dark side to that.
Sure.
Like the internet has created some crazy stuff, but it's undeniable that it's the opportunities there.
Yeah.
You could have the strangest thing that you're interested in, and it could turn into a business, which is unique and exciting and interesting.
What's the next thing that you're curious? What's your current curiosity following right now?
Yeah, that's an interesting question. I think I'm really enjoying this phase of my life. I have young kids; they're 9 and 7, and so I'm enjoying spending a lot of time with them and being part of their upbringing and their life and their sports and their activities and stuff. But in the back of my mind, I sort of see myself evolving in the direction of some kind of public service. I don't exactly know how that looks. I'm enjoying being a writer, and building my newsletter. We have something like 20,000 people across the world reading it now.
Wow.
Which has been really cool. And it's free, so people can sign up for free. I should include the link. It's called Profit Plus, and you can just Google my name and it's sign up for free.
Nick Halaris.
Yeah. And then same with the podcast. But I've sort of come to a conclusion that like I'm not in it to just make money and financial returns. When I was younger, I thought, back to bring it back to the freedom conversation. When I was younger, I thought that I wanted money because of the freedom that it could provide. And there's some truth to that. Like, don't get me wrong. Like in America or anywhere, it's better to have money than not have money.
Yeah.
It really is. And anyone who tells you differently is not telling you the truth.
Yeah.
Like, I really believe that in this day and age, you have to win in financial life. If you don't, you severely limit your opportunity set.
Mm-hmm.
And so you need money. But what I learned along the way is that what makes for a better or the ideal sort of lifestyle is when you have a sense of purpose along with that. So like, yeah, go for sure, pursue your financial success, take care of your family, do the things that you have to do. But if you can get that purpose mixed into it, then all of a sudden waking up every day is like it has a different feeling. And that's what I've been getting with the writing and the podcasting. And so I feel like I'm almost certainly going to evolve more in that direction. And I see my future on the business side as, mentoring young people who are interested in doing it and hopefully investing alongside them.
Yeah.
That's part of the thing I want to do. I have some really good people on my team that I've been mentoring for years that are now kind of running things, and I'd love to do more of that.
Because that's amazing.
I think it would be super
You're
fun.
like an incubator.
Exactly, like a real estate incubator. Yeah.
Incubating talent. What do you have any examples of that you can share of people who you've mentored and what some of the cool things they're doing now?
Yeah, like actually one of my partners in Metros Capital, Nick Fenmore, he started working for me. He has a super interesting background. He was a DJ.
Wow.
And dropped out of college basically because he was
Just do that DJ life, man.
But then eventually found me through some random, and he's been working with me and my partner John Young for years, and in recent years has basically become a partner of the business.
Wow.
So he's done really well and become, honestly, Nick Fenmore is probably the best house flipper in Los Angeles.
Dang.
Yeah. And
That's
there's
high praise,
it's high praise.
man.
And this is a town where there's house flippers.
Yeah.
But I would put Fenmore up against anybody.
Wow.
Yeah. But we're also doing a lot more sophisticated stuff as well. Like we're starting a lending business together that he's kind of leading the charge of. That one's called Westward Capital. We're just starting that this year.
Okay.
And we're still going to do stuff together at Metros. But we have.
So then,
Yeah.
I'm curious because you've seen a lot of people, you've mentored a lot of people. What skill set, what habits, what things actually make someone successful from that perspective, or be able to actually get from not financial freedom or passion freedom to getting to that point? Like what do people have to do to get to where their dreams?
Yeah, I think it's different in different industries, but what I know, just because I really have spent all my time in real estate is a place where to be successful, you essentially need like a couple character traits, all of which you could develop. But it helps if you sort of have them to begin with, or you have like an inkling of them. One is a unusual degree and willingness to engage in proactive behavior. So like real estate is the Wild West. It always has been. It doesn't matter where you enter real estate, but if you enter it in an entrepreneurial fashion like I did, like, hey, I want to flip houses, that exercise requires an unusual amount of proactivity. Like there's no playbook. You have to call people, you have to find deals, you have to meet people, you have to find construction crews, you have to do all this stuff, and there's absolutely no roadmap. And so to do it well, you have to be proactive. So that's one. Number two is this is a phrase that I got from another friend of mine, a mentor / friend who's a phenomenal, one of the best, if not the best real estate investor that I've ever met, but he refuses to do anything in public.
Fair enough.
But this is his phrase. It's called relentless follow-up. So basically,
I think we're brothers.
Yeah, it's similar. It's similar to the proactivity, but relentless follow-up is about just like refusing to leave something to chance. It's just like, if something needs to get done, I'm going to do what I can do, put it in the other person's court, and I'm going to make sure that whatever needs to happen, happens.
Yeah.
And it's really a true statement. Like in this business, I'm actually super curious to know whether it's a problem in other businesses, but in our world, in real estate, if you don't engage in relentless follow-up, you will lose.
That is so funny you say that because that is my business. My business is relentless follow-up. If the brokerage in the definition, or in the dictionary, the definition should be relentless follow-up, because that is the only way things get done. And what's very nuanced about it too is because everyone knows that person who's annoying, right? And it's this balance of following up and not being annoying. And it's hard. It's really hard to do because you need something, or you're trying to give something, and there's this challenge, this block between actually getting what needs to be done, what someone's goals are, what their plans are, and then commingling them and making it actually 1 + 1 = 3 kind of situation. But it's continuous. There's, you don't know how many times. I think one of the first big deals, one of the first bigger deals that I did, and the initial conversation started 4 years prior to anything actually happening. And that was just a continuous connection. Hey, value add. Hey, checking in. Hey, comps here. Hey, sales comps here. Like, it is so much of, I can smell it. There's something there, right? And I know that I can add value in the situation. I just need to be there throughout time, so that when it is time, when the time comes, when all the stars align, that we're able to position to actually capitalize on that, or help people out in that situation. But that's, I mean, I couldn't agree more.
Yeah, and that's a super good point. It's related to another one of the character traits, which is that in addition to unusual productivity and relentless follow-up, you have to be willing to engage in activities for a long time that have no apparent payback. And psychologically, that's really difficult. It's actually really difficult for people who do well in school, because school has this immediate payback function. It's like, oh, you study hard, you get an A on the test. And in our world, in real estate, there's so much that you have to do where there is no clear payback, and there may never be, but you can't lose heart. You have to keep going because you just never know. And so, that's psychologically, it's hard for people to do that. But if you can, you could put yourself in a position to be successful.
It's like the unknown marshmallow test.
Yeah.
You familiar with the marshmallow test?
Yeah, the one they do to the kids.
Yeah. So just for people who don't know the marshmallow test, so they brought these kids into a room. I think it was a study they did, and they put marshmallows out in front of them, and they said, hey, here's one marshmallow. If you wait 5 minutes, I'll give you 2 marshmallows. But if you eat it, you only get 1, right? And they tested these out, and I think they took these kids from the ones who took the marshmallow and the ones who waited, and looked at their career, and the ones who were able to wait and have that patience did much better in their careers, and whatever they ended up going and doing, because that patience, that resilience, that, like, I believe that there's something, I can wait it out and I can hold through because something's going to be better on the other side. What's very interesting about real estate, and you mentioned it too, is like, it's the unknown marshmallow test. It's like, maybe there's 2, but I don't know. Maybe there's 20. I don't know. And there's no guarantee. There's no guarantee. It's like, hey, here's 1 marshmallow. You can eat it now. If you wait, you might have 50 marshmallows, or you might just only have the 1, right? And that's up to you to figure it out. And that's a super, super tough reality to be a part of. And knowing that, though, from the experience and anecdotally, I'm sure you've seen that play out time and time again.
Yeah, absolutely. Yeah, it might even be worse than that, where it's like, you're gonna go negative 500 marshmallows.
You're gonna owe us 500 marshmallows.
Actually, then maybe you'll get like 10,000 marshmallows. Yeah,
that's this,
because in real estate, you do have to be willing to take what feels like a lot of risk. Even a lot of entry level jobs in our industry, they're low salary or no salary in some cases, and you kind of just get what you get. If you're successful, and that's not true in a lot of industries. Like, you get a job at Goldman Sachs or a consulting firm, like you get treated well from day one. But in real estate, a lot of times you're just out there. But I do think real estate is a cool industry, and training entrepreneurs for this reason, because it's such a Wild West place where you learn the habits of entrepreneurship in real estate really fast, because there's no other way.
You have to, or you fail, right? Do you feel like, because what I always mention this, and it feels to be true, and my experience is that real estate is an information game. It's an information asymmetry game. If you know something that someone else doesn't know, you can capitalize on that or make an opportunity out of something. Do you feel like we're headed in a direction with the more information that's publicly available, things are being more open kimono kind of situations? People can see sales comps, people can see what's happening from a micro, macro, legislative, like, do you feel like we're getting to a place that the actual fundamentals of real estate are going to change, the shifting of that, and it's going to be less about that information asymmetry and more about, I don't even know, what happens if you don't have that information asymmetry?
Yeah, it's an interesting question. I think you're right that it's only a matter of time before the information games that have produced a lot of returns, not all the returns. They produce a lot of returns in real estate, more so in other eras than ours, because we live and work in an era where like information is pretty accessible,
Yeah.
and pretty available, and it's not like the old days where like random deals would sell at wildly different prices because there's such an advantage.
Yeah.
So that probably happens, and the other thing that probably happens too in our lifetime is that the sort of transactional advantage goes away. And what I mean by that is that this stuff's going to be freely tradable. It's going to be tradable in shares of smaller increments than buying just the whole property. Like all that technology basically already exists, and the question now is, putting it on top of real estate and making it work.
So blockchain and fractional shares and stuff.
Yeah.
That's where we're headed.
Yeah, exactly. Like that to me seems like the logical next step for those technologies is to actually go, because real estate's antiquated in that sense, right?
Totally.
Like there's no liquidity in this stuff. There's no liquidity in the private partnership deals that get put together, and there really should be, because why not, right? There's liquidity in everything else on the planet, basically. So that happens. But I think there's one area of real estate where you'll continue to be able to make returns, or more than one. Like there's creativity, which is understanding the dynamics of urban evolution and putting yourself in a position to take advantage of it. So if you see neighborhoods,
reading the tea leaves.
Yeah, you see neighborhoods turning, or if you're really, strategic, you could turn a neighborhood yourself by partnering with the right people and buying up enough properties. Like those kinds of interesting strategies will continue to work. And then you can never underestimate in real estate. This is like the oldest wealth building strategy on earth, is to just effectively beat people on your investment horizon. And what that means in real estate is, in most cases, if you buy in an urban area where people don't flee, which that can happen, like Detroit's a good example where I grew up, you just have to buy this stuff and hold it. And if you have a time preference of forever, you will end up producing better returns than even the people who are kind of looking for that 17 IRR. They do it for a few cycles and then they get a big negative, where the person who bought the one building and said, you know what, I'm just going to hold this thing and I'm not going to pay any taxes on it for 40 years. And then the person who does that, in many cases in history, has produced a better return.
Yeah.
And real estate offers that because of the stability of the cash flows.
And in California, even more, and Ari was talking about this, is the Prop 13, which is the lower property tax basis. So your property taxes don't increase. So it's more accretive to be the owner. It's more valuable for you to own a property longer because your property taxes are lower than a new buyer because they reset. So it's a very interesting dynamic with that in place. I think it's going to be nuanced I'm curious to know if real estate becomes more of a big player, like the big fish swallow up a lot of the mom and pops. It consolidates, or if governments get involved from a housing perspective. That's very interesting to me because of this affordability gap that keeps climbing higher and higher. And I've had a few people on here who've talked about voucher programs and Section 8 and having ways with the way AI is headed. Like, who knows whether UBI is going to be more instrumental if people lose a bunch of jobs, and what are we going to do, right? How are you going to pay for things? Is the government going to have to subsidize it? So that's, we're going to see. It's going to play out. Whatever happens and is going to happen, but it feels like people have a sentiment towards that. That's what's going to be actually occurring moving forward.
Yeah. It's look, we're going into a really interesting time because technology is accelerating at a crazy rate, and it's absolutely going to be disruptive. I mean, a lot of these white collar jobs, like basically all the cool jobs that existed when I came out of college And when I came out of law school, are at threat. And these are high paying jobs. And so what is that going to do?
What do you use any technology, and are you exploring any technology to try to streamline the businesses that you guys are doing, either the lending or the real estate stuff, the development?
Not really. Just because like we don't have a scale problem because we're just small investing for ourselves. But I could see how they would be super useful for that.
Yeah, I'm interested to see what these tools are, just from being someone who's fascinated by the efficiencies, where you can build a one-person business and have it incredibly valuable, create so much value where previously you had to have a bunch of scale from people. Nowadays, I'm sure there'll be real estate owners and operators with AI property management and things like that are going to own thousands of units and have one person, two people, three people to manage and run and own all of these buildings.
Yeah.
Like that's on the horizon.
So that's and respond to the annoying customer complaints and
all that stuff.
That's already happening.
Yeah.
And it's interesting. Yeah. I feel like the macro question though that you were just referencing about like what happens to real estate. We're at a very important point, I think, in the evolution in the West in particular, in America and Europe, where it could go either way. It could go to where real estate becomes like a public good, like a utility, and all the returns get sucked up. And that really just depends on how things go politically. And what I've been trying to do with my writing and my podcasting is to sort of wake people up, especially people like me who've made it and kind of like made it sort of on a libertarian ethos. Like there's a big libertarian ethos in this country. But the truth is that the government has the most power in our system. Whatever business people want to think about themselves and their position in this society, if the government moves against them, the government's going to win. And so what I want to encourage people to do is to think about what kind of future they really want to be in and to work for that future instead of just looking at the government as some kind of enemy. In our business, it's really easy to just get really annoyed because the government, we interface with the government and it's consistently frustrating. It doesn't make any sense. It feels corrupt. It is corrupt, right? You get developers going to jail all the time for paying off Jose Huizar or whatever. And so it's easy to just develop like, man, I just want to close my eyes. But we can't close our eyes because one day it could all be taken away. All this free capitalism could go the other direction. And maybe for good reason, right? Like if we can't produce with a combination of free market and government policies, housing for people, then maybe it should get taken away, right? Like, so I'm trying to, with the rest of my career, is just keep focusing on that because I don't want government to take over. I believe in capitalism. I don't believe in, complete libertarian ideas, but I really believe that by and large, people should be left alone to pursue their creative endeavors. And if we don't get our act together, that's going to be a threat. And what we know from the 20th century is that it's a disaster. If that happens, then freedom is gone and nothing good happens for the population. So
we don't want
that. We don't want that.
We don't want that. I'm curious to know, selfishly, your newsletter, and speaking of creativity and wanting to educate people, how did that start? How did you grow it? And where do you envision that going? Like, what do you see that ultimately being?
Yeah. How it started was, for my entire adult life, I wrote almost every single day. I have like a huge number of finished notebooks, journals, essentially. And so I don't know, I became an expert at writing, whatever. I'm not like
did a 10,000 hours.
Yeah, I'm not like a David Foster Wallace genius writer, but I can write, I can hang.
Yeah.
And during the COVID era, right at the beginning of the outbreak of COVID, my kids were in preschool and I was involved in a bunch of city stuff. At the time, I was the chair of the Triple H Commission and on the LA City College Foundation Board. And that moment in time really kind of was a wake up for me because what I saw was this sort of immediate abandonment of community in favor of let me protect my perceived personal interests. And I get it. Look, a pandemic is scary, but I saw enough incidents of that where like really concerned me about like what is going on with the culture of America. It felt like there was this like rotting, selfish, self-oriented, just let me get mine. And you see that all over the place. Like, I think I'm right in the diagnosis that there's like a narcissism problem or something.
Sure.
But my thought was like, well, how could I make a difference in that? Like, I'm a nobody. But I just started writing. Instead of writing for myself, I started writing and putting it out there. And I sent it to 8 friends. And then I added some more friends, and then it started circulating, and then it grew to maybe 2,000 or 3,000. And then I started appearing on other podcasts, and then it grew some more. And then we have experimented in 2024 with a little bit of like promoting in other newsletters, and got a bunch of subscribers from that.
Wow.
Some of which have stayed.
Yeah.
It's when you start advertising, you get a lot of weird stuff. Like there's all kinds of fake emails, basically. So when you hear someone say, "Oh, I have 1 million addresses," well, a lot of those are like robots.
Yeah.
Which I don't really understand the incentive structure for that yet.
Uh-huh.
I don't know what's going on, but
Yeah, because you're not trying to like get fake readers. You want
Yeah.
people to actually learn that stuff.
and I don't know why they sign up. The thing that I haven't quite figured out is why would somebody go through the process of going onto the website and like putting their email address in only to be a fake person?
To be not real.
Yeah. Like it's not like I'm selling anything.
Yeah.
There's no fraudulent transaction that can be done, but maybe that's true in other areas where you can
Got it.
execute some kind of scam.
Yeah, that's so interesting.
Yeah.
And so where do you see the newsletter going, or where do you hope that to either lead to or to become its own entity, or do you hope that to become more of this academy or this growth or business
Yeah.
opportunities?
Yeah, I don't know actually. I'd love to see it turn into a thriving arm of my business work.
Yeah.
I'm willing to just keep doing it. Like to our point about the marshmallow
Yeah.
test. Like I'm willing to keep just because I like it, and I feel like it's adding whatever value I can add to the world. But I'd love for it to grow and get to millions of readers. I feel like the message that I'm trying to communicate is something that would appeal to a lot of Americans and people around the world, actually. And because it's about, encouraging people to find their calling and engage in their community and build wealth and do so in a way where they don't compromise their integrity. So like that message to me feels like
Worth spreading.
is worth.
It's a very positive newsletter. Like you feel pretty fired up. At least I do when I read it. And so
Well,
I
thank you.
appreciate
Yeah.
that about you.
Yeah.
How do you, again, another selfish question. How do you come up with what you're going to write? Like, do you have themes? Do you have pillars? Do you know? Or is it inspiration at the moment? Do you batch these beforehand? And the reason I'm curious is because I know a lot of people don't want to work a job, and you can make money being creative and doing your thing. So
Yeah.
what's getting deep into the weeds? Like, how do you actually structure and write it?
Yeah. The way things have evolved to now is I have a spreadsheet, and on one tab of the spreadsheet, there's like a bunch of prompt questions that I've basically either brainstormed myself or got heard from other writers that I found on the internet. So I have the prompt questions, and then I have a series of other tabs that are kind of broken up into pillars like politics or civic action and financial stuff, macroeconomic stuff, spiritual stuff, kind of all this stuff.
Yeah.
And anytime an idea comes to me, I just write it in the spreadsheet. And then most of the time, the act of writing it in the spreadsheet will produce an idea for an article at some point. Like I don't even have to refer back to the spreadsheet, but occasionally I'll open up the spreadsheet and say, okay, I need something to write for next week. Let me see what I can find.
Yeah.
Yeah.
How long does it take you to write?
It's gotten down too bad. Like the average article is like probably 1,200 words. It takes me like 2 hours.
Wow.
I write
Pretty efficient.
Yeah, I've gotten it down. Like I go on, which makes me think I should write more. Then I'm like, I have other things. I have my business.
Yeah. There's other responsibilities too, right?
Yeah, I go to Earth Cafe on Melrose,
Uh-huh.
which is my favorite coffee shop and the best writing spot on Monday. Usually Monday, and I write the first draft, and then like Tuesday I'll try to finish it.
Wow.
And that way the rest of the week I can
Yeah.
try to
Focus on
make
the other
this.
stuff.
Yeah.
It's very interesting. And I think
Yeah.
learning from people and mentors that I've had in my life too, it's that there's that focus. Like I always come back to focus because that's my biggest issue that I have is there's so many things that I want to do. I have so many ideas that I want to share and work on and be a part of. And there's a bunch of opportunities that are always present in what I'm doing. And it's okay. This may be a good opportunity, but it's not the opportunity that I've chosen or that I feel is the best direction to go into. And knowing that and having the strength and the wherewithal to stick with that
Yeah.
initial focus point it can be very difficult, but
I agree. It's something that, but it's a really important part of the process of being successful is the learning what to say no to. And I'm 45 and I still sometimes have second guess myself. But every time that I've said no to things that weren't like 100%, it didn't feel like, oh yeah, this is like, I feel compelled to do this. Good things happen because it opens up that space. And it's harder to do that when you're younger. Like when I was 25 and trying to make it, negative $200,000 in the bank or something. Like, okay, I might say yes to a lot of things because I don't know what's going to happen.
Totally.
But now that I sort of know myself more, I feel like as a man in particular, you don't really know yourself until you're kind of well into your 30s, maybe 40s in some cases. But you have to say no, and that's popular wisdom that you'll find online now. You'll see people saying like, "Hey, the best thing." I think actually Tim Ferriss just published a book about this exact subject, and it's a great topic because it's true. Like you can't, especially when you start getting opportunities.
Yeah.
Like once you reach a certain level of success, then people are going to start drawing upon you, and it might not be good for you, and you have to be willing to say no.
Yeah,
I'm not going to do that.
100%.
Yeah.
To wrap up, I kind of want to talk about the loan business you're starting and why.
Yeah.
And just give me a little color behind that.
Yeah, absolutely. One thing before I forget, just because you asked about the weeds.
Yeah.
So for your newsletter, which I love, by the way,
Thank you.
I like the themes that you've been using, and I like the idea of that you're trying to sort of add value in a very tactical way to people like me and other guests on the show. So keep doing that.
Thank you.
And here's an idea for you to just
please.
consider. So what I have been messing around with, which is working, is really giving myself a time limit. I say, I have 60 minutes to write this thing. And that time pressure produces results. Because writing can present in psychologically as like the worst possible kind of marshmallow test.
Yeah.
Because like you're staring at a blank page. What do I write? How many times do I edit it? How long should I look at this page, right? It's like really psychologically challenging. But if you just make some fake time limit, like, hey, I guess like a workout.
The constraints.
Yeah.
You constrain yourself.
Yeah.
Make that artificial constraint and force yourself to like, you can only do this and this is how much time, so you better fucking do it.
Yeah.
Yeah, I like that. 100%. I'm definitely going to be doing that.
Try it. Yeah, try it and let me know how to go.
I will 100%.
Yeah, and then
the loans.
Tell me
about
so we started a company late last year called Westward Capital. And the idea behind it is it's myself and John Young and Nick Fenmore, and then also a good friend of mine, Max Friedman, who's a very successful commercial real estate broker. He has his other company is called Mandry Capital. And the idea is that we would take our expertise in engaging in, street level residential and multifamily investing in the most competitive market on the planet, and create the kind of product, lending product that we wish existed in 2010 when I started in this biz, which is like people, not to say that lenders don't know what they're doing, but I sort of know we know what we're doing in a different way. We know what it feels like to be a developer, house flipper, spec home builder. We know all the pain points because we've done so many of these transactions. And so we're just trying to essentially create a product that for an up-and-coming entrepreneur or even someone who's more seasoned who's looking for a lender who gets it and wants, someone they can talk to that understands their pain points. That's what we've created. And on the return side, like we're just offering market. So there's no like secret sauce. Like we're not offering lower interest. We don't have access to some secret pool of capital that's priced at prime minus 500 or something. But we're going to offer market-based rates and just try to help these entrepreneurs and these investors succeed. That's their goal.
So it's like YC, right? They're not just providing the capital, they're providing the help and the growth and the structure to then help someone be successful in whatever endeavor. You're on their team. It's not, hey, good luck, here's some money, and I think I'm safe because I've calculated the risk profile of this and I'll still make my money back. It's, hey, here's the money and like, let's make this work for you. Let's make this succeed.
Yep.
That's really cool.
Yep.
That's really cool. I'm excited to see where that goes with you guys, and happy to be a referral source and resource to you guys there as well. So
appreciate that.
Nick, this is awesome, man. I know we could probably talk for hours about spiritual shit that my real estate audience might not even want.
They might not be interested.
But
fair.
I appreciate you coming on, man, and
thank you.
Looking forward to the next one.
Yeah, man. Thanks for having me on. I really enjoyed this conversation and appreciate the invite, and I wish you all the best with your podcast and your work.
Thank you, brother. Appreciate it.
Thanks.
Thank you for listening to this episode. If you enjoyed the podcast, it would mean the world to me if you could rate us 5 stars on YouTube, Spotify, and Apple Podcasts. It really helps us get our name out there and helps us get fantastic people like our guests to share their insights and knowledge with you. Again, my name is Taylor Avakian. I specialize in the sale of apartment buildings in Los Angeles and Southern California, and I look forward to sharing more of these conversations with you. See you in the next one.